Hey everybody, DayTraderRockStar here, and this is the high probability watch list for the week of December 11th. Now we're going to do something a little special today. I talked about it last week. We're going to be discussing the Russell 2000, or the Russell Index. We're going to go over what it is and some of the stocks on it and how it's setting up. And the reason we're doing this is because we're coming into a time in the year which is very bullish for the Russell stocks, the Russell 2000. So we're going to kick it off. And again, this is for December. And I'm going to go over some charts. I'm going to go over some theories of why the Russell acts very well at this time of the year, the small caps and the January effect and the Santa Claus rally and everything that has to come along with that. We're going to take a look at some things. But let's start off with a little history of the Russell 2000. Now, we're used to trading on day trading radio. We don't really look at what the index is that we're trading, even though we do trade futures and we trade the S&P futures, we trade Dow futures, and we trade NASDAQ futures mostly. But there is the Russell Index, and there's other indexes also. So let's just start off. The Russell 2000, a lot of people look at the Russell 2000 as small caps, but the Russell 2000 is actually part of the Russell 3000. And the Russell 3000 tracks the 3,000 largest public companies with shares trading on U.S. markets. So all of the markets, it's the 3,000 largest public companies traded. And the symbol is RTY. Now, my TC2000 doesn't give us a symbol. For some reason, it doesn't carry that symbol on it. But we could track it other ways. And I like to track it with the IWM ETF. Basically, it's just to track an ETF. So we could actually look at the chart and see the exact what the Russell would, it doesn't matter that we don't have the RTY, but if you have the RTY, that's the index. Just like the NDX is the index for the NASDAQ, the SPX is the index for the S&P, INDU is in the Dow. The RTY would be the Russell, but like I said, for whatever reason, the TC2000 does not carry that. So we use the IWM. And like I said, it all comes from the Russell 3000. Now, the Russell 2000, what we're going to be concentrating on today, is a subset of that index, of the Russell 3000. It includes 2,000 components with the lowest market cap. So now we're dealing with the lowest market cap. And the Russell 1000, meanwhile, contains the 1,000 components with the largest market cap. So as you can see, the 1,000 and the 2,000 make up the 3,000. So a little history on that. It was put together in 1984 by the Frank Russell Company, which is now managed by the FTSE Russell Company of the London Stock Exchange. Today, the Russell 2000 is the most commonly used index to determine the overall performance of small cap U.S. stocks. The market cap of the Russell 2000 is about 10% of the total market capitalization of the Russell 3000. So even though it has more companies than the Russell 1000, it signifies a smaller capitalization portion of the U.S. market. Some stocks that you might be familiar with, we'll just kind of go over a few stocks. Again, these won't be S&P components or Dow components, but there will be some that you know. KB Homes is a Russell 2000 stock. Treehouse Foods, Goodyear Tires, and Rubber is a Russell 2000 a stock. And again, the Russell 2000 people use this as an indicator of how small caps are doing as a whole. All right. So if you think there's a chance for small cap stocks to have a nice rally or to have a nice move either direction, this is something that you would want to concentrate on. And that's why we're concentrating on this week, because we do expect something big to come out of it. Now we're looking at the Russell right here, and you can see this long base that went out. It's almost gone out now 2 years, basically 2 years. So we've been seeing a lot of stocks that have been basing out like this, just an awful trading condition for long-term investors who got in, back in 2022, when the Russell was at, well, in this case, the IWM was 180. Now it's 186. It went up to, when you see these long bases, the best thing about them is they usually, when they come out of these bases, they usually trend really well. So it's good to catch them before they come out of the base. So the reason we're also looking at the Russell this week as a watch list play is we're going to show you that right now. All right, first I want to give a shout out to Jeff Hirsh, the Almanac, Stock Trader Almanac, good friend of ours here at Day Trading Radio. And he has a great service. So if you're interested in it, head over to his site, the Almanac. This is actually on this Tumblr site. You just do a search for Jeff Hirsh. But just look for the Almanac Trader at Almanac Trader. Now, he does a great recap of, going back to the 1950s, historically, how these markets perform, different cycles, seasonal effects, everything, everything. We talk about the Santa Claus rally. We talk about the January effect. We talk about all these terms that you might have heard over the years. They all come from, Jeff Hirsch's father, Yale Hirsh, who's the beginning. Sorry, he was the one who coined all these terms. So he's carried on his legacy and has done a great job. And there's a lot of data here. So, we talk about December, the first part of December. We're going to look at this chart right now. This is the first part of December. It tends to be a little choppy, but December really picks up going into options expiration week, which is actually going to be coming up this week. So today is actually the 10th. So tomorrow's going to be the 11th, right? 11th, 12th, 13th. And at the end of the week, here's when we start to see the market historically really start to trend up and aggressively. This is one of the more aggressive, bullish seasonal effects on the market going into the beginning or the middle of December into the beginning of the new year. All right. And this really, is led by the Russell. So this is just something I wanted to show you. Again, this chart right here is basically all the markets. And you can see the Russell here in red. Right down here starts really performing also. But look at the Russell here, pre-election years. All these pre-election years, and this is a pre-election year right now, 2023 going into 2024. This is a pre-election year. So let's get to the real good stuff here. I want to zoom up to the next. Small caps. Heat up. Small caps. We're talking about the Russell 2000 and Russell 1000 seasonal pattern since 1979. And again, December, and a little pullback right into the midpoint of December, where we are basically right. We're going to be heading into that right now, the midpoint of December. That little pullback. And then after the midpoint of December, we tend to get a giant move in the Russell. So we're going to see if that happens. Let's see what he says here. We'll just kind of take it. 3 weeks ago, we gave you a heads up on it was open season for small caps. Let's click on that and see if actually we can go to that. There we go. All right. Often referred to as the January effect, where small caps outperform large caps in January. Small caps have been struggling for 2 years now. And we just looked at that chart and you can see that. Hurt by non-transitory high inflation and most aggressive rate hike regime ever seen since the 1980s. Geopolitical turmoil and wars and stuff like that. All right, so this is all that's overhanging the markets. And the Russell 2000 small cap index recently hit a new multi-year low at the end of October. All right, now in this almanac, which you should get if you want to go to a site and get it, you could get on a page. You'll see what's talked about as the January effect. Small caps outperformance takes place in the last half of December, when tax laws selling abates. Our annual November stock. As you can see, the company chart, the Russell 2K, has been tracking the pattern quite well since July, and it looks like the small fries are coming out of hibernation just in time for small cap stock hunting season. Small caps are facing several obstacles mentioned above, but they rallied strongly off the October 27th low with the rest of the market. All right. So that was just something that he mentioned. Let's go back here one more time. And I just want to give you a little background on some of the things that I like. This year has been great for the Almanac. It's been hitting it. Everything seems to have been perfect when it comes to this. The historical trends that happen in the market year in and year out. So this is going to be an interesting time of the year coming into January and February. So that's why we want to focus a little bit more on the Russell. So now that we know why we're focused on the Russell, we know a little bit more about the Russell. Let's dig down a little bit deeper here. Now, when we come to individual stocks or how to trade the Russell, there's a couple different ways we want to look at this. If you do believe the Russell is going to move, and you really want to kind of wade through 2,000 stocks to find a good stock, I mean, that's going to be the hard part. But basically, we like to trade a basket of stocks, or what we call it, an ETF, or a tracking ETF, something towards that effect. Now, the IWM is our base benchmark ETF. That gives us a one-to-one return. We're going to call that the benchmark. Now we can get leveraged ETFs, something that gives us a bigger return than the benchmark. So right now, and let's talk about that. So if you wanted just to say, all right, I want to get into the Russell, I'm not worried about picking an individual stock. I do believe that we're going to get big gains coming into January. I just want to be with the index. The IWM was where we're going to start our hunt. Basically that's going to be something where you could easily just buy the IWM and maybe get a 5% return on that over the next couple months. Maybe more, maybe less. But that's one type of trade you could do. Now, if you really were aggressive and you felt really comfortable trading the Russell and saying, yes, I do believe this Russell is going to act like it always acts and it's going to rally really big, then you want to probably have a little bit more leverage in the so that we have these leveraged ETFs, these leveraged ETFs we call Pro Chairs or whoever puts them out. One of the best ones I like is the TNA. Now the TNA, let's take a look at it. Directional small cap bull 3 times. The 3 times means it gives you 3 times the gains that the that the IWM gives you. All right. So, for example, let's just kind of break this down for you. If we got in here in November at the lows, just right at the lows, if you notice, these charts are basically identical, right? The TNA, this is the Russell IWM. You see the move in November here. The move went from November all the way up. We kind of closed right on the lows, closed right on the highs on Friday. All right, now let's take a look at the TNA. So basically in November, we closed right on the lows and we closed. So basically identical in charts, So we're going to just mark off the bottom there and we're going to track that right to we'll just go to the high here, to the high of Friday's candle. And up in the upper left-hand corner there, you'll see a little box and it'll say we returned, if you got into the Russell at the lows in November by trading the IWM, the Russell ETF. That's just, you trade just like a stock, like you get into Intel or Apple or whatever. You would have gotten 16% gains. They went up 16% from November lows to Friday. All right. That's just an example of what, just so we can track it and understand the comparison between these two. So that's a 16% move from November. Now, again, same tracking, the same index, but a leveraged ETF, the TNA, same move, but now you're getting 3 times the return. So 16%, we're going to go to the low here. And we're going to go up to the highs. And again, there's fees. There's a little decay and repricing. So it's not 100%, 300% returns. But as you can see, it's up 50%. 50%. So that's pretty much 3 times. 3 times, a 50% move in the Russell. That's incredible. That's absolutely incredible. So as you can see, the small cap could give you big gains. Now, with big gains and big percentage moves come big percentage loses. So if this was to turn over on you, or for whatever reason did not work, you always have to, you always have to have that disclaimer out there. Things don't always work out like you want them, and investing is dangerous sometimes. So only risk money that you can afford to lose. All right, this was also a very nice inverted head and shoulders pattern right here. You see this, and I kind of mentioned this on the show. That's why I have these lines underneath. You have a left shoulder, you have the head, and you have the right shoulder, and this neckline here. So you have the beautiful neckline. Now you got the breakout. The spot to be in it was right here, but in some cases, beggars can't be choosers. You have to either get on your horse here and ride it, or maybe we get a little pullback here. I'm not going to risk that. And what I said on last week is this would probably be a great level to get in here, just to be in it. Just start to get in it. If it started to pull back, you add a little. You don't go all in. You take a little here, whatever, 20% of your position size, and then if it comes back, you get another 20%, and maybe if it pulls back a little bit further, you get another 20%. So you're getting your cost average down here as it kind of moves down. Not that I say it's going to come back down to that neckline, but I've seen that before. We've seen this market do things like this. So I'm not saying it is, but I'd rather be in here. I think you got to be in here. I'm actually going to take a trade in this, the same to TNA. I was waiting for this week. I wanted to see if we get a pullback. It looks like it's actually going to run tomorrow, the way things left off on Friday. So so this is the way I'm going to approach the TNA. I've been doing scans here, and I'm going to talk about a few stocks, but 2,000 stocks to go through. And a lot of these stocks I'm not really that familiar with, to dig down with the fundamentals and the earnings and everything about it. But I do know a few of them. We're going to go over a few of these right now. All right. I want to show you some of my research screening tools that I use. I use the Finviz Market site a lot, FINVIZ. It's really good. This is what it looks like on the screen. Let me see if I can blow this up a bit for us. Control it. Oh, I lost it now. All right, so you just bring up the main page and go to the index here and pull down Russell 2000. If you click on that, your Russell, all your tickers will show up here. Now, different ways we want to look at this. Normally, I would look at, I'm a chart guy, and I look at certain things, strength and momentum and stuff. But knowing that we're looking for a bigger move in the Russell 2000 overall, I want to stick to quality names. I don't want to try to just get the worst of the worst, but I would rather stick with the best of the best. So one thing I might want to do is, in this case, let's break this down to price. Let's sort it by the price. Needs to be. Oh, wait, Johnny. Now remember, the Russell 2000 is the small caps, small market cap. And we're probably not going to look at some of the big stocks, but lots of times you'll just get a feel for some of these stocks that you might, just to give you a look, you might be familiar with some of these. Dillard's, WD-40, this list goes on and on. And again, it would take a long time to go through all these stocks and chart them off. So I want to look for certain things that I typically look for in a stock. I apologize, my computer seems to be bogged down for some reason this evening here. But again, a lot of these names, not really big names. Fabrinet, a couple other ones. But what we're going to do is we're going to jump back up here. We're going to go to the screener. It's technical. And we're going to let that head over to the technical area here. And then we're going to click on patterns. And when you click on patterns and pull that down, you have all different patterns to choose from. Support, wedge patterns down, ascending triangles, descending triangles, channels up, channel down. We're going to just go with a channel up right now. Upward channel, upward moving stocks. Let's just take a look. And now it's going to probably break these down to, and it's not going to give us a lot. So let's see how many we're going to have. We got 160. That's quite a bit. But you can see micro strategies on there. That happens to have a good connection to Bitcoin. So that makes sense. Cord, NSCHRD, some other stocks, LANC. Some of these are really good names. What I like to do then is just take a look, because we have a channel up, I want to take a look at the charts. And you click on charts here, and that will break down all these charts, all these stocks by price, but by charts now. So I could take a look at a bird's eye view of the setups here. And you'll see that most of these are trending higher. There's a little trend, a downward trend here. That's in the SMCI. That's kind of an interesting one. The big pennant formation, but also a rising channel line here. That's very interesting. WTS, you can see all these stocks here pushing higher. And again, with the market's gonna, you're gonna have the wind in your sail. You might want to stick to some of these. CHRD, again, I like that pullback. Looks like a decent pullback in an uptrending market. ICFI, some other ones. But basically, you got the gist of the what we're looking at here. Now, I've already did some research and stuff, so I'm not going to waste your time on my slow computer tonight, for whatever reason. It's killing me today. I might have a virus. We're going to look at the next page here anyway, just while we have it here. This is another one, MGRC, McGrath Rent Corp. Nice pennant formation there. But, something like this back here, SYNA, pullback, and a nice pop. I like to get the pullback. Here's another nice pullback. STRA, some other ones. But again, this is a good start. Here's Abercrombie and Fitch. That's very, very strong. Yeah, a lot of these stocks are very strong as it is. That could be something off of lower trend line, Merit Medical Systems. All right, so I'm going to actually just show you some stocks that I've put on my list that I like. All right. Let's start off with, these are Russell 2000 stocks. Let's start off with APG. All right, engineering consulting, good stock. One of the things I do like on stocks are stocks that are pulling back but start to turn back up before they get a full rotation. All right, so here we have a stock that's kind of coming back, kind of flagging out, but we already started to turn back up. We're going to look out at this stock also, just see where it came from. You can see IPO'd in 2020, went up, nice pullback in 2022, and has been running pullback, ran, pullback, ran. We're probably still a little extended there, but like I said, we did pull back a little here. Now, I like the flag here. We're going to circle a couple of these because these are going to be my top 5 picks going forward. So the APG is number one. They, as you can see, they're an engineering construction company. All right, one that I just mentioned before was the Chord Energy, CHRD. Now, jumping out at me right now is the divergence here. And again, I can't, deny a divergence. So at least I want to mark it off for us as a nice pullback in the Russell oil and gas stock, which is not my favorite, but the divergence here is really pretty good off the 200 period moving average. We had a lower low right on the 200, a higher low on the that. You actually had a little divergence back here too between September and October. You see that divergence, right? That's another nice one. Very steep, and it had a nice two-week rally. Going back here, we kind of had a double bottom divergence last March, April, and a nice big move here. So a pretty decent divergence, nice pullback. I think we could see something here. All right, CHRD. We'll probably review these tomorrow morning too, so I can get this video is always going out kind of late on the weekends. I apologize, but it's for the whole week. Again, CHRD, Chord Energy. Independent oil exploration production company based in Houston, Texas. Focuses on acquiring, exploiting, developing, and exploring crude oil, natural gas, and natural gas liquids in the Billiston Basin. They reported EPS of $4.49 and revenues $896 million, exceeding Wall Street's estimates on the last earnings by 20 cents on the EPS and $219 million by the on revenues. So that was pretty good. They had a nice beat there. All right, let's go to the next one here. NE happens to be another energy stock. And again, I marked this off because it is oversold. It is a Russell stock, and it's what we call a 200 EMA breakdown channel line bounce. So whenever you have an underlined 1, 2, 3 pivot area, and the 200 period moving average cuts through that, you look for a bounce back up. So our target on this would be 45. It's at 42 right now. Maybe we're closing in on 43. But look at the momentum we just about have ready to rocket here. This is a really nice setup there. This is Noble Corp Oil and Gas Drilling. And again, 200 EMA breakdown channel line bounce. It's an HPS playbook play. You can find it on your playbook section on your dashboard if you want to go up there and watch a fast video on how to trade these. Again, the setup is just key here. It looks good, and especially that it's a Russell stock, and the Russells are might have some wind in the sails soon. So, Noble Corporation is a global offshore drilling contractor. This serves the oil and gas industry. Company offers contract drilling services through the fleet of mobile offshore drilling units. On July 11th, the company declared a 30% per share quarterly dividend. The dividend is payable September 14th. We already got past that. Just looking at some of the old news on this. All right. Well, that's a nice dividend also and buybacks they have going on, keeping a good balance sheet. All right, let's go to the next one. And a nice pullback. So it has everything going for it. If you're looking for oil and gas stocks, this is probably one of the better ones, considering it has everything going for it. It has, increased dividend, buybacks, the Russell, and take a look at that. X marks the spot, baby. X marks the spot. And not a divergence, but a nice Nike turn back up. Everything about this one looks good. Noble. Lock and load. That looks good. I don't get into these, but I probably will get into this. It's on $42. You know, like I said, I'm going to get into the TNA. Let's go to our last one for the Russell here that I like. Is the LNTH. LNTH is a drug manufacturer. They also had good earnings. And I like this turn back up here. I already circled it. You see how we turn back up aggressively on this? Yeah, when we turn up aggressive, let's see here, we tend to get some follow through. Now we're on that kind of on this neckline. We tagged it once, tagged it twice, 3 times, 4 times. We get through this one more time, we're heading up. So I like to turn up here. Nice candle on Friday. Let's circle it. I like the Noble a little bit better, though. You know, I think the Noble is the one I'm going to go for, but it doesn't. NE looks pretty good. LNTH here, we're going to mark it off. And then let's just take a look at Goodyear tires. Just want to look at it for a second. It's in the Russell. It's $11 stock. It's kind of, we looked at it back here on a double bottom divergence. And again, I circle these. Remember, when we circle a stock, we circle it real time, just like I circled them today. We end up going back and forget about it and end up looking back at them months later. And I see a circle. I said, man, wouldn't that have been a nice one to take, huh? Well, let's circle this one again. As we get oversold, we're flagging out. We're not quite oversold yet, but we are flagging out. I'm just going to circle it for the hell of it here. All right. But that was pretty good back here, June 23. I looked at it last time. See that high level rotation there. All right. And then, well, we have APG, GTLS, NE, LNTH, Goodyear tires. We want to throw anything else out there for you. Normally we do 10, but I'm also, again, really bullish on the TNA overall. So the TNA, the flag here, everything looks good on the TNA, starting to turn back up. The long base, real long base. I mean, the downward trend. If the small caps perform, we look back and this thing's at $50, you know, down the road, which could easily be. That's not a big push on this. That's not a big push at all to get to $50. That would be a good target for that. All right, that's going to be it. I want to get this out to you. I apologize if we're getting out late. I was, again, just apologize. We've got a lot more good things coming this week for you. So I want to continue to bring out the knowledge, the education, and the picks. And the futures, we're going to be ready to rock them tomorrow. Got some new stuff for you. If you have any questions or have any suggestions or have any Russell stocks that you want to add to any updates that I will put out there in the week, bring them my way. I'm just going to do one more here. I feel like I got to do one more. All right, what I did is I imported the 2000, all the Russell 2000 stocks. I imported them into the TC 2000 so I can run my scans off of them. And I ran what's called the approaching potential divergence, where I set up my scripts are telling me that most of the conditions are there for a divergence, but they haven't quite triggered yet. So they have conditions that are very similar to that. So I have about 42 that came up on the list out of the 2,000 stocks. And I'm just running through these real fast. And I want to, referring back to Jeffrey Hirsch's watch list and talking about how the Russell was making lows, multi-year lows in October. It makes a lot of sense to me, because the Russell 2000 is just loaded with oil and gas stocks, and they just have not been performing, it looks like. Here's the Neighbors industry here at the lows. I'm just going to go through these really fast with you and just make a comment on each one of them if we see something. Johnson Outdoors, That had a big spike down for whatever reason. Let me go back up there on that one. That must have been an earnings play, but Energizer. Look at that divergence on that one. I don't know if that's a good candle or not. I want to write it down. We'll probably end up looking at that one tomorrow. ENR. I'll look at that one tomorrow on the air. Origin here. And again, you can see a lot of these are kind of interesting but they're all oil and gas stocks. And I don't, here's a chemical one, Green Plains. Some of these are very close to being divergences too. Acadia, Shenandoah Communications, Liquidity Services, High Peak Energy, Smith & Wesson brands, gap down, Exponential Fitness. I mean, these are looking, Haynes Corporation, these are looking hideous. I understand why they're coming as a potential divergences, because if they all reverse here, they would be divergences, but they need to reverse first. Well, yeah, no doubt NE is my best bet. NE, nothing I'm seeing on here. It's a regulated water company for racers, been liking water companies. But yeah, nothing here that is showing up as anything worthwhile getting into. We have that NE, we have the LNTH. Nothing's going to beat those, looks like. Fisker, crushed, $1.60. They should get rid of some of these out of the index. It would probably serve the index well if they got rid of it, rotated some better stocks in here. Nikola. Wow. Wow, these are awful. Let's turn it off. Faraday, FFIE. Oh, this crap. How dare they put these on this list? Anyway, left me with a bad taste in my mouth for the Russell. But we learned a little bit about the Russell today. We know that we're coming into a bullish season for the Russell. The TNA, if you are on board, that's going to give you the biggest bang for the buck if it doesn't just bang you. And then, of course, the NE here, my pick of this on what we have is an X marks the spot, a 200 EMA, 200 EMA breakdown, channel line bounce, oversold stochastic, kind of just a triple play there. LNTH, it's a drug company here, has a potential with that cross back up. That looks okay. And GTLS. Yeah, the GTLS looked pretty good. Chart Industries. This one I actually kind of like because of the gap down. We move back up. Let's go over here. We had this gap down probably on earnings. Kind of popped. Moved back up, pulled back a little. Moved back up, pulled back again. It's having a hard time going any lower, and we got oversold here. So that does look pretty good here. And the overall look at things, it's nothing great here. But it is, I want to circle this one also. All right, so we're going to call that, a wrap there. Over the week, during the week, I will be putting out other updates on anything we do see. Probably not on the Russell, but on other stocks that we are in right now. NWL is acting really well. A couple other ones. We'll do those updates probably on Tuesday. I'll send an update for the last week's entries and what we're holding. All right. Have a great evening, everyone. I'll see you in the markets on Monday. That's tomorrow. Take care.